Hi, everyone, and welcome to another episode of True Wealth Advisors Group 101. That's TWAG 101. And today I just want to walk you through 5 charts that I think that you should see right now. And they're regarding different pandemics and market pullbacks throughout history. So without further ado, let's take a look. So this is probably the least relevant chart that I'm going to show you today, but it does show different epidemics that have happened throughout the years and the correlation with the stock market there. So you can see going back to 1980, for example, we had AIDS, pneumonic plague. 2003, we had SARS, swine flu, and Ebola, measles. Throughout the year, we've actually had Ebola a couple of times here, but those are all a little bit different because they didn't shut down different sectors of the economy for them. So let's take a look back through history. So the time period that I hear called out the most in comparison is 1918, where they actually were shutting down different sectors of the economy. They couldn't maybe go out to eat, similar to what we have going on now. And here's what happened here. So the blue box here, from here to here, is kind of the worst outbreak, and that'll be the difference in all of these. And then here is kind of the pullback during the time. So what you can actually see is during this time period, even though different areas of the market were closed down, the stock market actually didn't do bad. By the way, this is globally 50 million people died during this time period. I think this is the most comparable to our current situation. The Asian flu, about 2 million people died globally back in 1957, 58. And what you can see here is, here again, stock market had a pretty stiff pullback, about 24, 25%. It took about 3 months to get there, which is not quite as fast as it took us to get down 34%. But what you can see here is that in order for it to break even, it took about 18 months until it was trading at the same level. And keep in mind here, this blue box again is kind of the peak of when people were getting sick and dying during that time period. Here in 1968, we had the Hong Kong flu. Here again, market pulled back, not as stiff like what we had today. It was down about 14.5% here. It took about 7 months to get to the bottom and about 7 or 8 months to break even. Oddly enough, as you can see here, the actual peak of the pandemic wasn't until after the recovery was already on its way. And so that's part of the reason when I say stay put in the market, and don't pull out at the wrong time, is it's hard to say what the market's going to be doing because the market is looking at numbers based on forecasts. Okay, so if they think that the market is going to be making money, then the stock prices are likely going to reflect that prior to the actual incidents. So this last chart, we're going to look at the VIX, V-I-X. And the VIX is a measure of how many options are being bought and sold on the stock market. And we're going to put it in comparison to the S&P 500 down here, okay? So as there's more fear in the market, people buy options to hedge their portfolios. So you hear hedge funds, that's a lot of them buying and selling these options. And the more volatile the market, the more the VIX generally will go up as well. And you can kind of see here, so for example, there's a lot of different years that the VIX has gone up to around 40 and then come back down. You can see how it tends to pretty closely align with market bottoms, right? Now, what's interesting is that normally that level peaks out right around 40, okay? With this one, this last time here, it actually jumped up over 80, which is just as high, actually higher than it was in 2008, which is why we saw such a steep pullback, about 34% from the very top to the very bottom here. And now as of the time I'm putting this together, we're up about 20% off the bottom already. We still have ways to go to break even, but I just thought I'd point that out there. I'm not saying that we've definitely hit bottom or that we won't retest like we did back here in 2015 or 16, but I am saying that we may have found out where our bottom is, and if history is our guide, there's a good bet that 12 months out from now, even if a 2008 type scenario were to play out, we would be money ahead 12 months from now. So that's all I have for you today. Remember to do the 5, wash your hands, 6-foot rule, stay at home if you can help it, cover your mouth, wear masks, and clean and disinfect daily. Thanks a lot. Have a great day.